Okay. Good evening, everyone. I would like to welcome you back to the second class for the day for the certified level for agency bank subscription program. So our facilitator for today is Mr. Solomon Aderoju, FCIB, FCS. So the brief profile of Mr. Solomon is Mr. Solomon Aderoju is a professional banker with more than 25 years prongate banking experience. He worked in the UBA PLC and Electoral Trust Bank Limited, now known as Sterling Bank, performing senior managemental roles functions in retail, branch banking, corporate banking, credit structuring, and credit risk management departments in these banks. He later joined CMC International, a credit management consulting company, as the general manager, investing and structured projects, performing multidisciplinary consulting services for corporate organizations, banks, and foreign investors. In furtherance of his banking career, he joined Intertrust Limited, a finance and investment company, as its chief operating officer, and later resigned to establish a consulting outfit with other professional colleagues. As at now, he is the MD CEO of Sarcocad Imperial Resources Limited, a multifunctional business outfit that engaged in financial management, investment, and SMEs consulting services. Mr. Solomon Aderoju, a graduate of banking and finance, having attended Olabisi Onabanjo Ago-Iwoye, Ogun State in 2004, qualified as a chartered banker ACIB in April 1994. He is also holding MSc Finance, which was obtained from Crescent University, Abeokuta, Ogun State in 2018. He also obtained postgraduate in theology from Redeemed Bible College in 2010. He is an accredited business development service provider, trained and certified in the instance of SME SIMDAN by the Entrepreneurial Development Center, EDC, owned by Pan African University Lagos. He also attended Financial Inclusion and Business Model Training Program at Lagos Business School. He's also in the faculty of some training and human capacity development institution as a facilitator teaching banking leadership and management development courses. Pastor S.C. Aderoju is a fellow and once a governing council member of the Chartered Institute of Bankers of Nigeria, CIBN. He is a fellow of the governing council member of Chartered Institute of Cooperative and Social Enterprise Management. He is now the National Vice President in charge of Southwest Zone of Nigeria Association of Small and Medium Enterprise. Mr. Aderoju is happily married with children. So that's a brief profile of today's facilitator, Mr. Solomon Aderoju, FCIB. Sound to you, sir. I can take the floor, sir.
Okay, thank you very much,
Yes, sir.
my good friend Israel. Good evening, ladies and gentlemen.
Good evening, sir.
Sorry that we are starting this program late. I've been in a training program with Women Bank in Port Harcourt, and it has been raining seriously since morning. So that's why the network was not friendly, but I think we're managing that now for now. Okay. I want to welcome you to this important training program, which we need to know because micro and SMEs finance is very important. Like I've been introduced, I'm the current national vice president of Nigeria Association of Small and Medium Enterprises, NASME, and also a business development service provider trained by Lagos Business School. After my sojourn in the banking industry for over 25 years. So this evening, we are going to look at micro and SME finance within the next 1 to 2 hours. If time permits us, we can spend maybe above 2 hours, but we want to do everything within 2 hours. Looking at this important topic, the course outline, we have to look at the classification of MSMEs in Nigeria, the features of MSMEs, nature of MSMEs ecosystem, and type of MSME businesses, the importance of MSMEs in the country, and challenges facing MSME sector in Nigeria. Overview of MSMEs financing and no approach to MSME financing in Nigeria. Then we also look at financial statement analysis because it's another way of appraising the lending to MSMEs. Even though some of the MSMEs may not have a cogent or tangible financial statement, but some still do. But when we are talking about MSMEs, we are talking about pro, small, medium. So some medium businesses, we still have a very reliable financial statement. Then also we will look at the risk and financial management in MSME. Once again, I want to thank every one of us for this unique opportunity you have given to me to deliver this paper this evening. Can we all see my slide? And you
yes,
can
sir.
hear me very well?
Yes, sir, we can see it and we can
Yes,
hear you
very
clearly,
well
sir.
and very clear.
Okay, thank you. So looking at the classification, and I want the class to be very interactive. I can see some big names here. I can see Salihu Umar. I can see Olajide. I can see Tony Ogunade, Timothy Iwe, Abdullahi Ibrahim Ajaka, Ahmad Karufi Usman Malam. We can see Sola Adeleke, Stephen Daramola, Akanimo Achibog, Lukman Egbetayo, also Ejoke Ajochaki Moni, sorry if I don't call it well, Joseph Ayaun, Smitex Edet, Algon Musa. These are very big people. Francis, Joshua, Victoria, Ogechi. I had another Ogechi in my class today in Weber Bank. Yusuf Idris, Adebisi Bolande, Okoye Uche, Ifeoma. So I greet all of you and I thank you for your time. So looking at classification, we said we have nano. Nano is just introduced. When you say nano, that means it's just a one-man business. That's enterprises with less than 3 employees and the annual turnover of less than 3 million naira. They are without any formalized structure. So the question now, what do we mean by without any formalized structure? Everybody, because I said we are going to discuss it together. In my class, I don't talk alone. So everybody must talk, contribute to it. What do we mean by without any formalized structure? Anybody? Chief Toyin, do you want to try? Yes, please.
The question again.
I said, what do you mean by they are without any formalized structure? The nano businesses, enterprises.
Okay, it's a non-structured company. No good record, no bookkeeping, and protocols not observed, according to the rules that is governing organization.
Okay, what do you mean by no protocol observed?
They are not following procedures and processes relating to a structured organization. There are rules and principles governing.
Lukman. Yeah, thank you, Chief Toyin. Yes, Lukman Egbetayo.
Okay, the NAN business is just like a small scale business that operates under a small structure, like for instance, like a kiosk that is not necessarily a big structure or a shop, like a single shop.
Okay, like a single, you can imagine with less than 3 employees. So it's just akara french seller, or bread sellers. It's just one-man business, like you have said. Thank you, Chief Lukman Egbetayo. You can put your hands down. Thank you. Then we also talk of micro enterprises. These are enterprises whose employees are between 3 to 9 and annual turnover of between 3 to 25 million. The total assets, excluding land and building for micro businesses, are less than 5 million naira. So when you have an enterprises that have 3 to 9, between 3 to 9 employees, and the assets, excluding building, is between 3 to 25, that is micro. And in the same vein, some of them may not be formalized like nano also. And when we say no formalized structure, that means some of them are not registered, they are not incorporated, they are not registered, they don't have structure like big companies. Some of them, they don't have financial track record. They don't have recording of their financial transaction. Some of them are not registered with CAC. You can either register or incorporate a company. You register business enterprises, whereas you incorporate limited liability company in Abuja. So there's a different registered business, incorporated business. Registered business, that's enterprises, business ventures. While liability company is incorporated. And in law, if you have a limited liability company, you are separate from your company. You have a separate legal entity. The company is a personal on its own. The company can be sued or sued. So there's a difference between the business and the personality. So, but when it's enterprises, it's the same person. So there's no difference between the company and that individual that owns it. So macro enterprises now may not be registered or may not be what? Majority of them may not be formalized or have a structure. Ashiru, any problem? Then we also have small enterprises. Small enterprises, these are enterprises with the staff position of between 10 to 49 with annual turnover of more than 25 million, but less than 100 million. The total asset base for small enterprises is above 5 million naira, but not exceeding 50 million, excluding land and building. So while the medium enterprises, they are enterprises with staff position of between 50 to 199. So any company that have a employee of 200 million and above, 200 people and above is a corporate large. So and turnover of more than 100 million, but less than 1 billion per annum. So if you have asset base of 1 billion, more than 1 billion, then you are no more medium. You are not in the MSMEs ecosystem. You are now a corporate large. So the total asset base for medium enterprises is above 50 million naira, but not exceeding 500 million naira, excluding land. So, but let me just say something, which is not in your slide. The emphasis is more on the employees. The emphasis is more on the employees. So what we are saying is that even if you are a micro business of 3 to 9, okay, and you now maybe increase your staff to, let's say, 15, we will recognize you as small, no more micro. So the whole essence, the whole emphasis is on the what? Is on the employment, because we want them to increase their employment generation capacity. So we want the MSMEs to engender employment opportunity. So, and when I was the chairman of NASME, I always said that we need to be motivated, we need to be financed more, so that micro can move to nano, can move from nano to micro. Micro can also move from micro to small. Small can now become medium, so that we now reduce unemployment problem in Nigeria. So if you can imagine, if small now that's supposed to have 10 to 49 now move to medium of 50 to 199, assuming you now have 100 people in that category that can now employ like 100 people should be supported by government. And that's why I said this topic, this training is very important. How can we now finance? Because I know many of you are in financial institution. So how can you now support us more so that we can generate more employment opportunity? In consonance with Smedan's survey, the major economic sector of MSMEs are wholesale and retail, 42.3. Agriculture take 20.9, other services 13.1, manufacturing 9%, accommodation and food service 5.7. So in total, this accounts for about 91% of all MSME, while the other make up the remaining 9%. So MSME sector contributes to economic, social development, and poverty reduction, as well as the driving force for industrial growth and development of any country. They also contribute to employment generation, income generation, and gender development in both urban and rural areas of the country. So that means if MSMEs a sector is more encouraged, motivated, financed, we can do more. As of today, we contribute almost 50% to the GDP of the country. So we can do more if we are encouraged, like I always say. Now, what are the features of MSMEs? In the first instance, MSMEs, they have poor capital structure. Some of us, we don't have enough equity. Our equity, which result to low capitalization. There's no separation between the duties and responsibility between the management and staff. This can result to corporate governance lapses. In corporate large, we have efficient corporate governance, formidable structure, different between the board and the management. But in MSME's ecosystem, we don't have different duty. The prime mover is the same marketing officer, is the same recruitment officer, is the same accountant, is the same removal supplier. So you can do and undo. So there's no corporate governance effectiveness in SMEs. Then lack of access to relative and effective sources of finance. which hinders the contribution to the economic growth. Bank in Nigeria, their rate is so high for us to bear. Before I came to Port Harcourt, I was in the bank last week or so, and when I asked them their interest rates, I told them this one will not favor or with the MSMEs. Because when you are charging like a 45%, 40%, it's not ideal for any MSME to thrive. So lack of managerial capability also, and as well as succession plan and business continuity. When a one-man business, when the prime mover died, that is the end of that business. So many cannot survive after the death of the prime mover. So no succession plan. That is why bankers should be able to ask our people, who after you must have, though many people don't like that question. Even when I was in bank, I work in 2 or 3 banks, 2 banks and a financial institution. So customer don't like you to you have to, by the time you are 50 years old, your will must be present. By the time you are 60 years, you should be reviewing your will every 3 years. So lack of managerial capability and succession plan is a problem in Nigeria MSMEs ecosystem. The high mortality rate of enterprises, especially within the 5 years of operation. So these are the features and more. Then adequate financial record keeping. So many of our people don't keep financial record. And these are the things. When I was the chairman of Lagos State chapter of NASME, Lagos State Employment Trust Fund wanted to give us money. But many of our members could not access that money because they did not have a financial track record. It was only few that have a financial record, financial statement, or something they can management account that they could access credit from Lagos State Employment Trust Fund. The MSMEs are being run by individuals which can resort to key man risk. Okay, so key man risk is one of the problems facing MSMEs in Nigeria. One-man business. The improved production process due to usage of manual and outdated technology. So many of us do not have latest technology to drive our business. People are still using crude way of production and manual technology to drive their business. In the same vein, we don't have cogent collateral to cushion their request for loans. And that's why government has introduced collateral registry. That's something central bank introduced so that it will solve the problem of collateral for MSMEs, that you now cannot use your movable items, your bags, your shoes. Women can use their bags. Women always have many bags. So bags, shoes, and so on, movable item. If you register it under collateral registry, you cannot use it to access credit from banks. But when you talk of legal mortgage, many of us may not have a property to give you legal mortgage on our property. So we can only give you movable items, our equipment, and so on and so forth. So lack of cogent collateral is a problem. Then imported raw material that lead to high operational costs. Some of us, we have to access our raw material from abroad. So, and you can see the rate of the Naira exchange rate now, almost 1,600. So to bring in raw material from abroad now is a problem on its own. Now, nature of MSM ecosystem. So it's just like what we have said, managers are also owners who supply the initial capital. So the MSMEs is the prime mover that's going to contribute the first capital. So and they are in full control of their businesses. Then talk about area of operations. Some MSME operate mainly local, coupled with small operational activities within the industry. Then when you talk of size, the size and category of business are determined by the number of people working in each business. Sales volume also determine where to group, like we have said before, whether nano, micro, small, medium businesses. Then financial strength, the amount of fixed assets and current assets will also determine where to categorize each business entity. So these are the nature of MSME ecosystem. The ownership structure, we have said that nano is not formalized. The micro, small, and medium enterprise have different ownership structures. There is sole proprietorship, the partnership, incorporated businesses. So a sole proprietorship is just can be run by 2 or more partners, where a private limited liability company can have some shareholders. Like we have said, if it's a limited liability company, it will have shareholders, it will have board of directors, and the owners are quite separate from the business itself. In this case, ownership structure is very important factor in distinguishing between nano, micro, small, and medium enterprises. Any question to date? Do you have any question? Are you really following?
Yes, we are.
Yes, sir, we're following, sir.
Okay. Then let's now look at type of SMEs business. SME exists in most economic sectors. We have trading, merchandising, we have manufacturing, we have services. So we have traders, okay, just buy and selling. We have manufacturing, we have services. So trading is the business of buying and selling of tangible goods or commodities. They make profit by selling the goods or commodities at prices higher than their purchase cost. They add value by either breaking bulk or moving goods closer to the buyer. So we have example of that, people running supermarkets, distributors for manufacturing companies, market traders, importers, even exporters also. These are trading enterprises. So some of them, they are distributors, some of them, they are into retail, and so on and so forth. Then we also have, okay, trading can also be classified based on geographical area. We have local and international trade business. Local involve the purchase and sales of goods within the boundaries of a country. International trade involves the purchase of goods and services between countries, individual in different countries. This involves import and export related businesses. Then we also have wholesale trade, purchase a large quantity of goods from one or more producers, warehouse them, and later resell in large units to retailers, industrial, commercial, institutional, and other relatively large businesses. In general, the sale of goods to anyone other than a standard consumer. Then retail are those people that buy from wholesalers and sell in a very small quantities to the ultimate consumer for a profit. It can be done either in fixed location, like stores, like shops, in the market, door to door, and online has also increased opportunity to sell without having a formalized or structure, maybe shop or location. So some people are now selling online, and also they are making profit from that. Manufacturing combine raw materials, labor, and factory expenses. These are the people that produce. So they have a significant amount of plant and machineries as part of fixed assets, depending on the intricacies of the production process. So the inventory can be at raw material, work in progress, and it's work in progress, then finished goods. Usually have more operational regulation and environmental requirement to deal with labor laws and environment, just to say. Then they make profit by selling. And production costs are categorized as direct material, direct labor, manufacturing. Some manufacturers may sell directly to consumer, but most will sell to distributors. That's trading business. It should be expected that the manufacturer margin should be greater than that of a trader for the same product. So manufacturers should make more profit than the trader that buy from them. Then services, this produces intangible products with no physical form to its customer. So usually require less capital to start. So services businesses, we have people running human capital, hair salons, schools, repair shops, banks and accounting firm, like with the consultants, banking and insurance transaction, and so on and so forth. So some business may also belong to more than one class. A restaurant, for example, combines ingredients in making 5 meals, sells a cold or bottle of wine, and fill customer orders. In such situation, the business will be classified according to its major business, so defined as the core source of revenue. Okay, in that case, restaurants are more of the service type, though they provide catering services. There are industries with unique peculiarity, and CBN has a standard industry code for banks that categorizes businesses accordingly, referred to CBN circular. So this circular is in our banks, whereby CBN still have right to categorize businesses according to CBN itself. So you may say you are into trading, they will say no, you are into production. So CBN has a code for banks to categorize some businesses according to their operational activities. That is the circular number. So what are the importance of MSMEs? So let me throw it open to the class. Like I said, I don't want to be talking alone. What do you think they are the importance of MSMEs in any economy? Yes? Anybody?
Creation of employment opportunity.
The employment opportunity, that's one. Chukwemeka. What are the importance of MSMEs in any economy? Joseph Ayaun.
The importance of SMEs in any economy is that it aids the GDP of the nation, and
Okay.
it brings about inclusiveness in financial sector. So the economy of the nation is improved or boosted by the financial activities of SMEs.
Thank you. Abdullah Ibrahim Ajaka, I can see your hand up before. Okay, Salihu Huma, sorry, Salihu Huma.
Yes, they boost economy of the country and they create wealth.
How are they creating wealth?
Because they are the producers from the grassroots, small businesses that produces that increase to the GDP of the country.
Okay, thank you for that. Any other person? Okay, let's see what we have on the slide. So employment generation, like one of you mentioned, we contribute over 90% of the nation workforce, promoting indigenous entrepreneurial skills, and contribute to the GDP of the nation. We contribute nearly 50% of the nation GDP. Then enhancement of quality of life in both urban and rural areas by providing essential products and services. Then innovation and economic diversification. Many MSMEs, they are to youth-led ones, business. They also help us to diversify the economy or also the businesses. Like we said before, you can see some of the MSMEs that are into so many other type of businesses. And this is the era of fintech and agricultural tech. So MSMEs now operate fintech and they also operate agri-tech. So agriculture is no more what it used to be in the past, where people now use a hoe and cutlass to farm. But now we use technology, latest technology, to drive the agri-tech. So these are the innovation to reduce dependency on oil revenue. So we also generate foreign exchange through exports of goods and services, thereby enhance the balance of trade of the nation, as well as generating of revenue to the government in terms of taxes and other levies. They also facilitate on-tap savings, therefore encouraging capital formation needed for economic development and the facilitation of linkage between local producers of raw material and the corporate entities that need this raw material for their day-to-day operation or production. So MSME supply raw material to the corporate large. The lack of Dangote, the lack of Nigerian breweries, the lack of Guinness, the lack of Unilever, we the MSME supply their raw material. So it's a linkage between the local producer and corporate entities that need this raw material. Now, what are the challenges? I want some people to mention the challenges facing us in Nigeria, facing the MSME in Nigeria.
Okay.
Joseph.
One of the challenges that insufficient capital base.
Insufficient capital base. Okay, yes.
Yeah, for them to run their business effectively. And secondly, let me just say, less factors of production to facilitate their process in terms of electricity. Let me say, the neighbor in which they will employ to give room, and no level of training, because I believe that there are no much platforms that is easy for them. So that is my own viewpoint of what the small and medium enterprises face at the moment.
Thank you for that, Joseph. Yes, another person?
Lack of infrastructures.
Okay, lack of infrastructure like what?
Good road, electricity, pipe on water, because some of these SMEs that are into manufacturing need light, and there's no constant light in the country.
Okay, thank you. Yes, what else? No lady has even talked in this class since we started. I want a lady to talk. A lady to tell us one of the problems facing MSME in Nigeria. Can we see the faces of our ladies? Bolanle Adebisi, Omolara, say something. Bolanle Adebisi, Omolara, can you mention one of the problems facing MSME in Nigeria? Is Omolara in the class? Yes?
Government policies.
What do you mean by government policy?
Like if policies that government may like the tax reform bill, I don't know, it may likely affect some of the small businesses, small and medium businesses.
Okay, can you mention one of the government policy that's affecting us? Omolara, can you mention one of the government policies? Okay, anybody? Ogechi, Fioma, Victoria, we want you to talk. Any of you? Victoria. Okay, let's see the slide. Infrastructure, like one of you mentioned, the sector is being faced with inadequate power supply, lack of good water supply and bed, and it's bad road, though, not bad. Bad road. Okay. So we have bad road in Nigeria that is affecting our businesses. So bad road is one of the problem we have. Then you have to really look for your own, your own alternative power supply. So that is why we said that MSMEs have to have its own generator. If possible, you construct the road leading to your factory or to your business's area. And bad roads, some of our people also, they are the ones that construct their own road. The lack of finance, the sector has limited access to good sources of financing. And also, if it's possible or available, is at a high cost. And consequently, increasing the operational cost. Last 2 weeks, I went to train a finance house, okay, in Lekki. So when I introduced myself as a vice president of NASME, they said, we want to go into the way of MSMEs. I said, fine, no problem, we can work together. So when I now asked them about their interest, they said 4% flat. So quickly I calculated it, that's 48%. I said, the Lord is our strength. So no MSMEs can survive that 48%, 4% flat. Then I said, okay, when you come, we will see what we can do. What can you do? There's no how that interest can be less than 30%, which is still high for MSMEs. Then lack of raw material. In some cases, the needed raw material being imported, like I've said. And so foreign exchange mounting, you can imagine the cost of foreign exchange now, almost 1,600. So to bring in raw material of, let's say, $1,000 now, you will spend over 1.6 million for that. So that is bad. Then poor entrepreneurial skills. Some of our people don't have the required entrepreneurial skills. So government need to be training us from time to time to enhance our entrepreneurial skills. There's a huge managerial skill gap among business owners. Then poor financing record keeping. Some of these problems, we call some of them external challenges. We also have internal challenges. We have the exogenous one that is beyond us. And we also have internal one that's within our purview to control. Like poor financial record now, it's not external. Nobody is causing that one for us. We are the one causing that one for ourselves. So we need to maintain proper financial record. The inability to assess their financial track record deny some of them getting loans. I think I've mentioned that. Then I'm happy one of you mentioned government policy. You can imagine when the first subsidy removed by the new president now, the current president of Nigeria, you can see the effect over the business environment in Nigeria today. Then another problem that is giving us a lot of concern is the influx of foreign products into the country. Some of them, the quality is not up to our own quality. But the problem is that they are cheaper. So sometimes they are of inferior quality when compared with those produced in Nigeria. But because they are cheaper, and why are they cheaper? Who can tell us why they are cheaper?
I believe it's due to mass production, due to the technical know-how of the country in which such products are coming in, making our nation a dumping ground for the inferior material or inferior products.
Okay, because they have access to more latest technology than our own, and also they have access to finance. They have access to finance, and that's the problem we always say at times in Nigeria today. When you have what we call African Continental Free Trade Agreement, which Buhari signed before he left the office, whereby the 54 countries in Africa signed an agreement that we cannot do trade within ourselves, within the continent. We say borderless business transaction with other countries in Africa. But I always say something anywhere I go that if care is not taken, Nigeria will not become a dumping ground, because there's no how our own product will not be costlier than other one being produced in South Africa, in Uganda, in Egypt, because they have access to finance, they have good infrastructure. So by the time they produce, it will be cheaper than our own. So people will now switch over to their own products. So government need to do something to make sure that we too will have access to finance, we have access to good technology and also infrastructure. So influx of foreign product is a problem on its own. Then lack of business continuity, I think we have mentioned that. Lack of research and development like other countries. The other country enhance the research and development of their people products, but we don't have something like that in Nigeria. Then climate change will also affect us. These are external issues. Agricultural value chains in Nigeria, with no exception to the MSMEs sector. So climate change is another wahala. So what are the sources of financing in Nigeria? Number one, we talk of personal financing. The best way to finance business in Nigeria is a personal finance because it bears no cost. From your own deposit, your savings, over time, you can start business. You can start your business using your own financial money, finance your own money. And it's also good because to weather the storm, when you use your money, it's good for you. If there's any problem, like I did export business some years back, to export some product to Germany. And there was a story because the buyer could not pay us fully, okay? Because they have to look at the quality of the product, they have to discount it. So what they pay could not cover our money, which we spent on that business. But because we use our money for it, we didn't borrow from the bank, we can just surmount that problem. Assuming we borrow from the bank, we may not be able to pay the money fully. Then the bank will not be trading us, but because we use our money for it initially. So when you want to start a business, it's better you use your personal financing. Another source is financing from family and friends. Okay. In fact, we also say something. We say the three F's: the family, the friends, and the fools. The fool are not that because they are foolish, but because they have confidence in you, they can cover some money for you at a low interest rate. That's why we call them the three F: the family, the friends, and the fools. But the fool does not mean that they are mad or they are foolish, but because they have confidence in your business idea. So they can now say, okay, let me just give you a soft loan without much interest so that you use it because they have confidence in you to transfer that business. So hope you will not disappoint them. But we have some people that, even novice, people are looking for idea of somebody that have idea, good idea, that they can also finance. But unlike in Nigeria, you are on your own. So, but some people can still have confidence, maybe a friend, apart from friend, maybe somebody say, okay, I want to do this thing. Can you lend me so much? I will pay you back in the next 1 year. So that's friends, family, and fools. Then loans can also be generated from financial institutions like deposit money banks, otherwise known as commercial banks, merchant banks, microfinance, and so on and so forth. Repayment of deposit can be daily, weekly, or monthly, depending on the loan agreement. The overdraft is to finance the working investment of the business, such as purchase of stock in trade, acquisition of raw material, and payment of operating expenses on a short-term basis. So these are the way you can finance business in Nigeria. We still have the loan, time loan. Time loan is a loan that's going to be paid within a year. So we come from the business within 12 months, bullet payments. So term loan is over a year with a structure within stipulated time from the cash flow. The loan attracts interest and must be fully secured. Then we also have import finance for people that want to bring in raw material or finished goods for selling from other country. So interest is paid on the facility while the tenure is determined by the asset conversion cycle. We are still going to discuss asset conversion cycle later. Every business has its own asset conversion cycle. So the cycle must complete or meet before you can pay back. So we also have local purchasing order, whereby if you have a contract, the bank, the financial institution can finance it by maybe you want to supply maize to Nigerian breweries. So smart, anything? Okay. So if you now have a contract from Nigerian breweries of Guinness, Nigeria to supply maize to them, then the bank can now give you money to go and buy the maize, but you must be able to buy the good one as per the quality, as per the content of the contract paper. That's why as lender, you need to study the contract paper yourself. There's something lawyer called onerous clauses. Those clauses that make the contract to be null and void. So you need to, as a lender, you need to study the contract paper to know the type of maize they want. Is it red maize or white maize? What is going to be the water content? The water content must not be more than 2% or 4%. What is the particle level? Plus or minus 5%. It must not contain stone or any other impurities. So if your customer now instead of go to where you can get a good maize, go to another place and now get a maize with 5% or 10% water content, then the principal or the contractor will not pay. So that's the risk in the local purchasing order, LPO. So, and you must also study the payment track record of Nigerian breweries. How long will the Nigerian breweries pay your customer or the contractor itself? Then we also have mortgage loans. SME can access mortgage loan to purchase property or factory construction. This attract interest and repayment comes from the cash flow being generated from the business. The tenure ranges between 3 to 5 years. So when somebody wants to construct a building, property, or factory or shop, they can also come to you to access credit from them. Then lease finance. That is, instead of giving the money directly to the customer to go and buy their own assets, the bank can now buy the equipment in their name, or the financial institution can buy the equipment and lease it to the customer. So they will now be paying what we call lease rental. So the lease rental will be paid just like on installment basis. Then after that, you will now become the owners of that equipment. So the lease finance also has its own risk because the machine has to be okay. You have to look at the obsolescence. You have to look at the factory errors and so many other things you need to consider there. Then project financing, SME can also accept finance to meet specific projects. The lender must consider the project feasibility, profitability, and cash flow being generated by the business. So, or from the business. So the project finance, MSME can want to start their own manufacturing business or cottage industry. So, but you, the lender, must consider the feasibility, the viability. You can now call for the business plan or viability report to know whether the contract is feasible or not. Then, if it's a limited liability company, we talk of the venture. Okay, the venture is that you are having um sorry, you are having confidence on the assets. You are taking charge on the asset of the business. So the bank will now have control over the assets, both fixed and the floating assets of the company. So we call it a charge over the asset of the business, both fixed assets like the equipment, like machineries. The bank can now take over them if they don't pay. We also have floating assets like cash and so on and so forth. So you can also have, so we now call it as all asset debenture. That means you have a charge over the fixed and floating assets of the business. So that's the debenture. But then it can also include the landed property. That's what we call mortgage debenture. So when the property is involved, then it will now be mortgage debenture. So mortgage debenture is better than all asset debenture, like we discussed today in Wema Bank. So all asset debenture contain just fixed assets and floating assets. But when property, building, landed property is involved, it now become mortgage debenture because property is involved. And as lender, you have some rights if the customer does not pay back. Ahmed, are you there? Then capital market. MSMEs also can go through the capital market these days to access credit fund under what we call second-tier security market. So, and there are some conditions stipulated by the SSM that you can source finance from capital markets. So that one is another way. Then internally too, some MSMEs, they have cooperative society like NASME. We have our own cooperative society whereby we can lend ourselves money to finance some businesses. So cooperative society attract low interest because it's our own, where guarantor are sold within the cooperative. So we have to look for somebody to guarantee us within the cooperative. So that person must also have money there to guarantee another fellow. So these are the way to finance a business. Then we also have surplus credit. Who can tell us the meaning of surplus credit? Who has idea of what surplus credit is?
I think it's when the supplier supplies you on credit.
Of credit without payment. Thank
Yes.
you. You can also, okay, pay within the next 1 month or 2.
Month,
So,
yes.
so after selling your goods, you cannot pay. That's good. And let me also say that many corporate large in Nigeria today, they live on the surplus credit. So surplus credit is a form of finance for their businesses. The business owners acquire the raw material or equipment and pay later. It is a non-interest bearing financing known as spontaneous financing in credit. So when somebody asks you what is spontaneous financing, is the non-interest bearing finance like payables. They supply you, if they supply you maize, and it will take you 4 months to pay the maize, the money, like Guinness. If you look at the account of Guinness, Guinness take average of 3 months to pay their supplier. So within that 3 months, they enjoy what we call spontaneous financing. Then we also have development bank loan. We have a lot of development bank these days. We have Bank of Industry, we have Bank of Agric, we have DBN, Development Bank of Nigeria, we have Nigeria Export Promotion, NEXIM, Export Import Banks, we have Grow Finance, Grovin. But the only thing is that some of these banks, development banks, they will still need your commercial banks as intermediary. So if you want to finance, access money from Bank of Industry, you have to pass the paper through your bank, or Bank of Agric, or DBN, or NEXIM. So you have to go through your bank. So at times, bank will now say, why can't I give you this money? But the thing with the development bank is that their own interest is lower than that of banks, but they also have their own conditionalities. So the microfinance institution, they are not microfinance banks. They are short-term working capital can provided by a microfinancial institution, apart from being a microfinance bank. Microfinance bank is being controlled by Central Bank of Nigeria, but microfinancial institution is controlled by Ministry of Finance. So we have a lot of them that you can also access credit from them. Their grants, at times you have grants, but each grant has its own requirements, eligibility requirements. Some of them are transaction based on what you want to do. Okay. Donors include some corporate organizations, non-government organizations, faith-based. Some churches, they have their own grants. Okay. So non-interest finance. Now we have some non-interest financial institutions, which is widely known as Islamic banking, as it upholds the value of Islam. The Central Bank of Nigeria has amended another financial institution, BOFIA, in 1991 to include non-interest Islamic banking. So we have some, so Islamic banking, they don't charge interest. They have what we call profit sharing. So you have a lot of them. We have Lotus, we have a lot of them in Nigeria now. So Musraka joint venture means partner agree to contribute capital and share profits from the business on pro rata basis. So their partners agree to contribute. So the bank, the financial institution, and the customer will now share the profit on pro rata. So under that is the Musraka joint venture. That's the meaning of Musraka. Then we also have Mudaraba. Mudaraba, one partner provides capital, while the second partner provides technical knowledge. The investment that comes from the first partner is called Rabuma, capital provider, like a financial institution, while the management is carried out by the second partner, which is the customer. And this one is called Mudarib, manager. We also have their own lease arrangement, we will call Ijara. This is a contract between lessor and the owners of the assets. So Ijara. Then Salam, forward sale. This is a deferred delivery sale contract, whereby the supplier delivers the agreed goods at a future date, but the money is fully paid on the spot. So all these, they are non-Islamic ways, but they were structured after the Islamic way of financing, because Islamic does not, they call it haram when you charge interest. They say it's haram. So they believe in profit sharing. Then government intervention fund, we have a lot of them. We have CACS, that's commercial agricultural credit, and it's going to be extended till September 2025. Anchor's borrower also, we had Anchor's borrower 2 years ago, but it was not well managed. So some of the customers could not access that money, and unless some other part of the country. We have agricultural development scheme. We also have the sector and so many other ones like that. They will have export simulations facility, which is into, manufacturers that are into exports. And you can see the interest of 7.5 for 3 years facility or less. Then we also have MSMEs, macro, small, medium development, which can be accessed through back of industry. Actually, back of industry, we have so many of these government pension funds. So when you go to the website of back of industry, you have a lot of all these funds that you can access through them, and some of them are just government-backed loans or facility. Then Youth Empowerment Development Program. This is for the youth entrepreneurs with Tata Restitution and NYC certificate. Beneficiary are to register collateral movables and finance equipment with the National Collateral Registry, which I've mentioned before. So we also have so many other ones. We have JEEP, we have RSSF, we have Lagos State Employment Trust Fund, which I've already mentioned before. And this one is in 2 categories, micro and small. So micro can access up to 500,000 with an interest of 5% per annum and a tenure of 1 year, just within a year, while the small businesses can get up to 5 million within 3 years. That one can pay within 3 years. Then we also have AGMIS, that is Agricultural Small and Medium Enterprises Investment Scheme, which was introduced in 2017, but it was not well managed by NASA. So the maximum loan amount is 10 million at an interest rate of 5% per annum. Now, what are the key considerations? Yes, let me throw it back to the class. What are those things you need to consider before you lend to MSMEs? What are those things you need to consider before you lend to MSMEs? Hello?
Hello, sir.
Yes?
Their record book.
Their record book, okay.
Okay, the capital base of the company.
The capital base of the company,
Yes.
good.
What?
Right there. What else?
Level of income and
The viability
expenditure.
of the business.
The viability of the business, good.
Yes.
What else?
Don't they call you sis now?
Hello. The number of
Yes,
years that the business has been operating.
the number of years, good.
You consider the years you have started the business, the months, if it's
So experience
up to a
counts.
year or more or less.
Yes, good.
The nature of the competitors in the business.
The nature of competitors. How do Chukwemeka? What do you mean by that?
Businesses that are not hello.
Yes, I can hear you.
You know, when you were teaching, you were talking about production cost. If production cost is higher, then purchase will be done from importations and all of that. So the competitions in production, that's what I'm trying to refer.
Okay, thank you. Yes, what else? Okay, let's see the slide.
Statement of account.
Statement of account for how many months?
For 3 to 4 years.
3 to 4 years. Statement of accounts.
Yes, sir.
That's too much now.
For 12 months, 1 year. 12 months, 1 year.
Okay, good. But you have the statement of account in your record. Do you still need to Okay, you just look at it because that one is with is in your bank. Unless if they have account in other banks, you will now ask them to go and bring stable account from other banks. Okay, thank you. These are all valid points. So, but you have to assess the character of the person. There's something we call seals of credit. What do you consider? The character is very important. Character is the willingness to pay back, not ability to pay. So the customer must have good character. So how do we assess somebody's character? Because one of the audio books says the heart of man is desperately wicked. So how can we know about somebody's character? Yes?
Historical track
I
record.
believe from the hello. Can I speak?
Yes?
Can I go ahead?
Due
Yes,
diligence.
continue.
Can I go ahead?
Yes, please. Joseph. Okay, is that Olajide?
Okay.
Yes, due diligence. You have to carry out due diligence.
How do you carry out due diligence?
Hello?
Yes?
I said the lender must carry out due diligence on the customer.
I now ask you, how do you carry out due diligence?
Okay. Number one, by investigating to maybe within the environment where that person is operating. You understand? Yes, and you know the person where he's living, his track records, and what people are saying concerning him in the environment.
Who are those people concerning him? Who are those people saying?
His neighbor, where his office is located, his neighbor, then some of the customers. One can interrogate them to know more about the person.
Good.
Yes, sir.
Not only the labor, you can even ask the staff. Like I was telling some in the class today, I got to know about somebody's character in Inewi through staff.
Wow.
They say our guy is always attending parties. That's why we're having problem. That's why we're having problem in this company. That every Friday you must go to a party.
Wow.
So from staff, from friends, from enemies. Enemy means people selling the same type of products or the same market. What do you
Sir,
know?
you can also find out from another bank, from banks.
Because
To know that it's owing banks.
reference from another bank if they will agree.
Yes.
Because in practice, bankers don't like to divulge customers another unless when I was in the bank, you can
If he has collected loans from other banks without paying them, there's this this new law that yes, once you seek to collect.
That's from credit bureau. You cannot ask the bank; they will not divulge that information.
Yes, that's what I want to say from credit bureau.
Yes, unless in those days, in our own days, not this aggressive banking you people practice these days. In our own days, we have we go to clubhouse. You know, banking was not as stringent as what some of you express today. We have time to go after business of the day. You can go to club with your friends. So when you have friends from other bank, informally, as a friend from another bank, you can just say, I learned that Abdullah Ibrahim Ajaka is one of your customers. Yes. What do you know about that man? Is that man is restless? You now say, no. He's trying his best. In fact, we just gave him 5 million naira credit and he's doing well. So informally, because they are your friends. But if you want to be official, they may not attend to you. But informally, being the member of the same club, that's why in the banking industry then, immediately you become an assistant manager, they will enforce you, they will even pay for your subscription to belong to a club. But gone are the days. Even bankers may not even have time to go for club these days because of targets. because of what we call MPR, monetary policy, monthly policy, monetary review, okay? Monthly performance review, MPR. Some of you are MPR phobic or employer phobia, because every month the bank will ask you your performance. So bankers these days, they are under pressure, unlike some years back. So informally, you can ask. So capacity, borrower character through friends, through enemies, through staff, through neighbor, through the press, through other banks, you can ascertain. The credit bureau will also tell you whether they have borrowed from another bank and they're not paying. The capacity of the borrower is quite different from character. Capacity is the ability to pay back. Then you have to consider their cash flow from the business. You have to consider the profitability. Then capital base, what is the borrower contribution to the business in terms of equity, which serves as cushion and in case of default. Then collateral, that is the asset being pledged by the borrower to secure the loan. So it is the second way out. Then condition precedent, we have to look at the condition, prevailing condition in the time of in the country. So then also the borrower must adhere to certain conditions to protect the lender from losses. Customer other issues, the customer product, the market potential, internal control process, regulatory compliance, very important. The customer must have met with the regulatory issues. If your customer is into production of bottled water, like this bottled water in my room now, so he must have gotten NAFDAC approval, he must have gotten some Standard Organization of Nigeria approval and NESRA, because if he doesn't have those ones, NAFDAC will not allow him to rest, or SUN will not allow him to rest. NESRA can even close that's the environmental issue. They can even close the factory, like they did for one of my customers. So then you have to look at the risk in the business, both external and internal risk. What are those risks facing this business? If it's external risk cannot be avoided, but it can be managed. Okay, like socio-political, government policy, this cannot be avoided, but it can only be managed. But the internal risk is within the purview of that customer. Who can tell me the example of internal risk? Example of internal risk that can face any business.
Example of internal risk that can face the business, it should be from the operation aspect, which is the employees who are not well trained for the job. In terms of inexperienced staff, can cause you a havoc or a collateral damage that will ruin the company. Maybe you have started another. I think that will bring even a globalization to a short.
That's one. Another one.
Yes, poor management.
Poor management.
Poor management of funds.
Okay. So that's
inability to monitor the business, and the staff take advantage of loopholes and steal a lot of things from the company.
Okay. Okay. Salih said we should excuse him for prayer 15 minutes. Are you back? Salih Huma.
I'm back, sir. I am back, sir, since I am
okay,
back.
thank you.
Yes.
All right. So all this, you have to really look at that. So internal risk. I'm happy when somebody said people, employees. So the first risk under the internal risk is people, your staff. They can make or mar your business. So if care is not taken, your staff, they should know what you know. They should be able to work according to you also. So if your staff are not good, it can also affect the business. So another one is your environment, where you are conducting the business. How conducive, how accessible, how neat. If you are into food vendor, so the areas must be neat. Okay. Then you also talk of your process. How long will it take your process, your food to be ready? If you're into food business and customer don't sit down and say, okay, we are coming, no, Mumbo, wait for us, so the food is still on fire, and you are there for over 20 minutes or 30 minutes, they will leave. So you have to really look at your process very well. Then your internal control process, lapses. If there's a lot of frauds, a lot of staff infidelity, a lot of theft or hacking of your system, so all this will affect your, so you have to, as lender, you need to consider their process, their systemic failure, their internal control lapses. Process is very important. The environment is very important. So these are the internal control, internal the operational dynamics of the enterprise, the management commitment and dedication. How dedicated, in fact, that's another way to assess the character of the borrower. How committed is that person? The loyalty, the commitment, the dedication. Okay. So if the customer is not committed to his business, it is not a good thing. So how committed is your customer before you give him money? How dedicated is the customer? You need to look at that. Then you also need to look at macroeconomic environment. Okay. So, and variables like government pronouncements. Like now, you can see how stringent the working environment is in Nigeria today because of government policy. All subsidy removed. You can see the consequence. Then the forex, okay, the black market, the rate at which we exchange naira now to dollar. You can see the amount. Then the staff position and the team spirit, the technology adequacy and status, the competitive environment and the strategic advantage. So all these are very important. So before we talk about new approaches, just give me like a minute or two, please. I need to do something here. Just one moment, please. Okay. You give to me. So we have said then there are new approaches to lending, new things coming up, though we still believe that the family, the founder, the friends, the 3Fs, and the fools can also give us money. But these days we have talk of new development. We have a venture capitalist. The venture capitalists can invest in MSMEs and take active role in enterprises, monitoring to maximize the business financial return. So these days we have a venture capitalist, which comprise of both high net worth individual. In Nigeria, we have some of them that they are into venture capitalists and they can now finance your business with a large amount of capital. So they have to have maybe 2 or 3, 4, 5 years to be in the company as a part owner. So after they want to go, you will now pay them out. There's something we call sinking fund. You'll be keeping some of the money on one account so that whenever they want to leave, you will now buy them out, pay them out. Then we also have agent investors. These are affluent people who invest their own money into another business, startup, usually in the exchange of equity. So agent investors, they are also there. They want to be part owner as well. So venture capitalists, agent investors. Then we also have business cluster alliances. This is forming a cooperative agreement with other enterprises within the business sector to generate funding with a view to reducing financing costs. Business alliances will also facilitate market penetration, enhancing sales and marketing strategy, build product credibility. So these days we have some business clusters, alliances that when you join them, they will be able to finance you just like a cooperative societies. So, and they will also give you access to penetrate to marketing strategy. Some of them may even be having training intermittently in order to add value to your business. Then we have crowdfunding. Crowdfunding is not like a susu, but it's done through the internet. This is the invention of payment to access fund. It is the online practice of raising fund. In other countries, all these things, they are very, very important and they are very active. So you can just access those companies through your internet. So they will now raise funds for you from a large individual hand. We have some people that contribute into the crowdfunding, small investors. Well, so it will now form a pool of funds whereby you can access when you want to have finance for your business. We also have fintech, although I know you have, you know all this, fintech can also give you money. These are the era of fintech. They are more aggressive. They are more forthcoming than big banks. Their own approval is faster. And some of them may not even have documentation or high interest or seamless requirements. Some of them, you know, they rent money, pay later, pay stack, one finance, and so many other ones like that. The only problem is that when you hold them, they have to tell the whole world that you are holding them. There's something we call API, application process interface. They have your record. They use latest app to drive their business. So if there's any problem, they know people that surround you. They know people that you be that have the same, maybe the same society, the same club, that they can report you to that you are owing them under the API. Then we also have informal financial institutions like money lenders. These are the new approaches to MSMEs, savings cooperative, which provide finance for MSMEs. Then letters of credit. This used for importation of raw material and finished goods by SMEs. So at the request of the exporter and the seller of goods, the importer bank issues documentary letters of credit, whereby the bank undertake to pay the seller for the delivered goods. The seller also undertake to provide the buyers with documents relating to the imported goods. So letters of credit is so safe, and it removed a lot of raw material. Okay, as we are sending the money, the good is also being sent from others. So those of you, the bankers of the buyers, the bankers of the exporter, they will work together to make sure that there's no problem. We also have trade finance, managing trade payment with greater ease at lower risk. There are three types of trade finance. Okay, we have documentary collection. In this case, the buyer does not need to make any payments for the product. However, the sellers have some control over the goods on the buyer make a payment in the future. Then we also have a guarantee. The bank of the buyer undertake to pay the amount if the buyer fails to honor obligation under the contract. So these are just latest approaches. Also, the SSF that we have mentioned before. When you go to the capital market, but they have their own terms, they have their own condition for it. So SME credit analysis. We have information. So you need to visit the customer. Information from friends, from enemies, from competitors, from press, and from credit bureau. So when you want to analyze the credit for MSME, you need to get right information, get enough information on the customer business. You also need to know the business in and out. You need to know the dynamics of the business. Then information gathering, get enough information on the customer business, customer visit. Okay, let me ask question. When you visit customer, what are those things you are going to get from that visit? Let's discuss that. What are the things?
The physical nature of the business, nature of operation, viability of the business, the environment.
Environment, good, yes.
The nature of the business.
Nature of what else?
Rate of patronage.
The rate of patronage, yes.
And
feedback from customers.
What do you mean by that, Victoria?
Feedback from customers, how people are talking about the product.
Okay, how people are talking about the product, good. What else? So when you visit the customer, okay, nature of the record keeping. Somebody need to mute himself or herself. It's making noise. So when you visit the customer, you will know about the business, like you have said. You will know whether the products are selling. You will know his position in the market. You will know whether he's a market leader or market follower. You also know whether what are the competitive advantage he has over others. You also know whether the stock are moving or not, whether they are staying, whether they're obsolete. So a lot of information you will get when you call the customer or you visit them. Then you will now also know how dedicated the customer is, whether he comes to office or the shop every day. Okay, if he does not come to the office every day, you will know. Then you can also conduct background check from credit bureau. At least two. You have to get information from at least two credit bureau before you lend. All right. Then also you need to external risk, internal risk, business risk. So you cannot just do thorough analysis without looking at the credit risk or risk in the business and how it will affect that business you want to finance, which we are going to do later. If it's a company that has a financial statement, you also need to review it. It's a quantitative way of purpose why the customer is looking for the loan, okay? And what are the source of repayment? These are the structuring. The cash flow from the business must be positive, adequate enough to pay the principal. So the cash flow the business is generating must be enough to pay the principal, the interest, and also leave some margin for the customer himself. So the cash flow from operating activities, normal business transaction, must be enough to pay the principal, the interest, and leave a margin for the owners of the business. So also another way of structuring facility is to look at the banking need or small businesses as well as their value chain. For supply vendor, they will require current amount, like local purchasing order and invoice discounting. For manufacturer, they will require current account, term loan, and also import finance facility and overdraft. They are just a type of a loan that they will need. For an wholesale, they will need current account, they will also need loan, and for a retailer, their own majorly is loan, import finance, and overdraft. Then for personal people, they will also need loan for consumption, either to buy household items, maybe to buy fridge, to buy they have to meet the need of the retailer, the consumer unit. To move to financial statement analysis. So what do we mean by financial statement analysis? Is that if the company has audited accounts, so the lender must analyze the financial statement. Now, the question to the class is that, why do we need to look at the financial statement at all? And what are we going to get from this analysis? Yes?
The cash flow.
The cash flow.
Yes, sir.
Okay.
The financial stand of the business.
The financial stand, the health of the business. Brilliant.
The credit worthiness of the business.
The credit worthiness of the business.
I think we also look at the turnover, the rate of turnover, that the sales volume.
The rate of turnover. Okay. What else?
So right now, there's a situation that happened. I don't know. I'm going to bring it.
So we want to look at the financial health of the business. We want to look at the ratio, the strength, the risk, the weaknesses of the business, and it comes to qualitative analysis. We have two ways of analyzing credit. We have the qualitative, we have the quantitative. So the qualitative is something we can calculate, like looking at the character, looking at the capacity. These are the qualitative. We have discussed all those things before. But the quantitative is looking at the financial statements, looking at those to take investment decision, comparative analysis, and strategic management by prospective investors and management. It also used as indices for performance of the loans to be. So financial analysis to look at. And also in the financial statement, we have the content. We have the chairman's report. We have director's, then we have statement of report, we have note to the account. So chairman's report, who can tell us what the chairman's report will give us? And why do we need to look at chairman's report? Anybody?
It usually gives a general overview of the business, the vision, and the target and what they want to achieve, and a brief summary of what has been achieved so far about the business and what they wanted to achieve in the nearest future.
Brilliant. It's always telling us the future of the business. At times, the the figure may be bad. The ratio may not be good. Performance report will give us assurance that, look, don't worry, we have started strategizing. We have started our strategic movement. We are going to use new products. We are going to open new branches. We are going to do this and that. So you will now be rest assured that their tomorrow is better. Yes, we have acquired land to plant our own raw material to South Africa. We are expanding to others. Very, very important for us as lender to read. It will also add credence to, and if the account is not rosy, like what happened to Unilever some years back, when all the financial resources were not okay. So the chairman's report gave us assurance as the bank and investor that no problem, it can just be bad now, tomorrow will be better. These are the things we want to do. We want to introduce new products. We want to introduce this. We want to be part of our product. So you know that they have mission, they have strategic objective. Director's report will also add credence to what the chairman's report has said. But more importantly, director's report will face operational activities more than that of chairman's report. He will also be able to tell us whether any of the director will be resigning or whether you are going to have management coming in. So director's report, and it's written by the MTO. Auditor's report is also very important for us to look at errors which the company needs to pay attention to, or maybe the account show the true and fair view of the business operational activities. So that is auditor's report. Then statement of financial position. We are calling it profit and balance sheet before. So that is the new name for balance sheet, so SOP. You know, before the advent of international, they are the one that changed that changed the name of balance sheet to SOP. We joined the financial reporting standard in 2013, 2014. Before that, we were using accounting standard. Every country now had their own accounting standard. The problem is that if you prepare your own account in Nigeria in consonant with accounting standard, and you want to have a business transaction in Ghana, you have to prepare another financial statement that will now be in consonance with that of Ghana. But with the advent of financial reporting standard, is now generic. It's now be the same thing everywhere. So because the standard is the same thing, so there's no point preparing a financial statement if you want to go to UK or Canada for a business transaction. So it's a generic reporting standard under the International Financial Reporting Standard, IFRS. So then the statement of profit or loss and other comprehensive income, that is the old name for profit and loss accounts. Okay. Then, okay, cash flow is not here. Cash flow is also very important. The cash flow statement is sort of cash flow. The old name was cash flow statement. Then we also have is written twice. So instead of auditor reports, change it to statement of cash flow. That's what that's supposed to be. So let me correct it. So it should be of cash flow. So which is more important than profit and loss accounts? Is more cogent than profit and loss accounts, because that will show us the sources and how the cash for profit accounts show us the profit. The cash may have cash, the company that has been used or expended. So it summarizes, it was formerly noted. So SOFP contains current and not current, liabilities current and not current, the equity of the control of the business owner as their own stake in the business. So what we have in the profit and loss account, other income, expenses, gross profit, and so on and so forth. So cash flow from operating activities, just like sales and purchases. Then cash flow from investing, come from financing, is when the customer or the company have money or issue of shares, from financing, issue of shares, dividends. These are just activities we talk about. So note to the account, change in equity also